Hello, Adrian, and welcome back to my channel. Well, as the title of my video for today, it's a little bit of a joke, not being super serious here, but there is some truth behind it. As you know, during the weekend, you should not be trading at all because not having a position is actually having a position because you're not having a position. Well, but there's several reasons for that, of course. If you're trading during the weekend, there's a very low volume, meaning that there's more market manipulation. And as you know, Bitcoin is currently still a very small asset if you compare it with like gold or any other stocks, major stocks. We are only at a very small market capitalization of around 200 billion. So we have to be very careful, and as a technical analyst, during the weekends we have a smaller edge, so that's why I always advise people to not take any positions during the weekend or close their positions during the weekend and make trades only during the weekdays when CME or futures traders or normal traders are trading. And also there's a thing that, you know, during the weekend so much fuckery is ongoing, so many things can happen, so it's just best to just keep cool, just keep analyzing the charts and not have a position at all, and figure things out when the markets do open during the normal weekdays or during when the traditional markets are trading as well. So let's start off with what's going on in the rest of the world. Here we go. Let's refresh. Let's check out a little bit what the numbers are of the COVID virus at this moment. Oh my God. The US has crossed the 700,000 confirmed cases. Spain has a lot more from comparing to yesterday. Yesterday it was only 180, so they increased by 11,000 people that confirmed got the case, the COVID case. Let's look at our chart. Let's refresh this one. And we are at 2,240,000 people that is confirmed worldwide. And what we saw the last couple of days that I've been talking about is that we had the flattening of the curve, but that is no longer the case. If you can see, the whole world we're actually having an uptrend once again. There's no flattening, there's no curve. This is not looking good, guys. And yeah, let's look at the countries. USA, Spain, Italy, all coming up. France, as you can see, France was hopeful. We had a small dip here, and then now it's starting to curl a little bit more. So France is actually doing better than the rest of the top of the countries. This is not looking good, guys. And we've heard that President Trump is already thinking about opening some of the states again, or slowly reopening the economy. That is one of the reasons why the stock prices actually went up, and definitely the Nasdaq, which is currently actually the leading indicator for most of the trading action actually. So the Nasdaq is one of the charts that I've been paying attention of very closely, because that one seems to have been leading the trend of all the other stock markets. So that's one. But looking at the chart of the coronavirus, the COVID virus, I don't think it's a very good idea to be reopening. Although, of course, I understand the pressure of the political parties to be reopening the economy, because right now it is as dead as it can be. Nobody is producing anything. Companies that are projecting their second quarter revenues are saying that they're most likely down 40 to 50%. So yeah, where are the profits? I mean, people are just looking at the S&P and they're thinking like, oh, we have to buy the dip here. It's a good time to be buying. Well, most of those people didn't experience what a bear market is, and we as crypto traders, we have the let's call it the luxury. It's not really a luxury. Let's call it the pain of how it feels to be in a bear market, right? So we've had that in 2000 for close to 2 years that we were in a bear market. So we know that DCA, or buying the dip, is not such a great strategy, guys. Buying the dip during the bear market, we know that as a crypto traders, but you have to realize that the S&P has been going up and has been in a bull market for the past 10 years, right? So let's look at the S&P. This is the futures. Let's go on a monthly basis. Let's obviously not look at this whole dump here, but let's go back all the way back where we had that push. Let's see, and that is, yeah, look, as you can see here from this point here, 2009 to right now 2020, that's 11 years. So 11 years that the market kept going up. An 11-year bull market for the S&P. So people who are traders, of course, trading traditional markets, they are not accustomed to understanding how it feels to be trading a bear market. And that's the difference between a crypto trader and a stock market trader. Because yeah, they can say what they want. They can say like, guys, this is very cheap. Look, we shaved off. Wait, it went down. Let me look it on the chart. Price difference. So we went down 30%, and now we bounced back up 20%, over close to 20, more than 20%. So we are only, oh no, that's wrong. Sorry, 15%. So we went back up 15% already from our drop of 30%. So we went back up 15%, but still it's 50%, 15% lower than the price before. Buy the dip, guys. Buy the dip. But guys, what if this keeps going down? Is DCA going to work? I doubt it, right? But we as cryptocurrency traders, we've learned it in the hard way, and that's basically what I wanted to say. Tell you guys, I would be very, 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 very careful trading this market right now. And definitely, if you think that you've saved some money and you think like, okay, well, stock market is 15%, still 15% down. Let's buy now. It's definitely going to recover whenever the market is going to be reopened or the economy is relaunching. True, but when is that going to happen, right? And there's always a very big lagging indicator, right? It doesn't mean that because the economy is opening, that production is suddenly going to be as it was like before. I think that the seriousness of this coronavirus is a lot higher than what you think. Plus, the FED printed over 7 trillion, not billion, trillion dollars that has been injected into this market to push this price back up this 15% so far. Don't you think that this will have any, effects later on? Because it's very simple. You have more supply of something, the value of that particular currency is going to go down because there's more supply. So it's just as simple as that. So we have to be very, very careful with what is ongoing right now. But that's a story for maybe a little bit later. Let's go back to Bitcoin. Boom. So we've been talking about Bitcoin for a while. This is the 2-day chart, and I've been speaking about this multiple times already. And let's go back over it a little bit, one more time. And that's the bearish crossover here from the EMA 55 over the EMA 200. That is what happened here, as you can see, on the 29th of March. And I've told you guys that most likely because of this bearish cross, every time that happens, we have a continuation of a downtrend. So things are most likely not going to be looking very, very good very soon. It can still go up. And how much can it go up? Well, we can go back to our previous bearish cross, which was happened here on around the 10th of September 2018. As you can see, we had a bearish cross here. The orange line dropped below the blue line, and then what happened? Price went down, but then went back up. As you can see, he went back up and touched the orange line. And what happened here? We went back down, but we haven't touched the orange line yet, as you can see. If we go back even more in time, we had that bearish cross one more time in 2014. 1 second. As you can see here. So in 2014, we had the bearish cross here. It was on the 20th of October 2014. And what happened? Price went down and then retested the cross and touched not only the EMA EMA 55, but even higher, one for a fraction of a moment, the EMA 200 or the blue line. So let's go back to what happens now. As you can see, we had the bearish cross, and we are in that movement right now where we are retesting that orange line or that blue line. So is there a possibility that we are still going a little bit higher to around this area here? Between 7,800 and 7,600, which is our blue and our orange line. Well, yes, of course we can. But also this can also already be completed as a retest of the orange line around here. So of course it's not sure that we'll be getting there, right? So, but I'm just saying there is still a probability that we are going up a little bit higher, but that does not mean that I think that we will not break down substantially. And how much are we going to break down? Okay, let's look at what happened in the past. So if we look at in the past and the price range and the previous bearish cross, what happened after the cross? Let's take a price range. So we had the bearish cross here, and then it touches the EMA 55. Let's take a price range from here until the bottom here. We had the bottom here, and we shaved off 53.79%. What happened in 2014? Let's go there. Bearish cross, bearish cross here. Touched the EMA 200 this time, and then we went down to all the way down here, which is 66.43%, right? So we have 66% and 53%. So what happens if we shave off that price from where we are at? And we'll just take in consideration that we will be touching the orange line or even the blue line. So we touch the orange line and we shave off 53%, somewhere around here. Yep, 53%, somewhere around here, and we get the price of 3,500. So 3,500 if we get our previous scenario, right? And what happens if we shave off 63%, but we touch the blue line, right? So let's take that here. We touch the blue line and we go down to around 63%. Was it 63%? Let's check it one more time. 66.43%. Wow, it's a little bit more even. 66.3%. And then we would have a price of approximately 2,600 US dollars. So that doesn't look good, guys. But basically that's what I am expecting. One of those two scenarios. Not now, because as you can see, when how long did it? Oh yeah, let's take a look how long it took before we actually dropped from that position, right? So let's remove it and let's see the date. How long did it take? Date range. So when we had the bearish cross, then we had the retest of the orange line. It took us 62 days, so 2 months before we hit the bottom. But maybe it's more important to see when we made that big crash. We did it in 1 month. So in 1 month after the touch, we crashed down. And let's see in 2014 what happened there. Oh, I scroll a little bit too far. Oh, here in 2014, date range. Sorry. Date range. So we had the bearish cross here, then we touched the 200 EMA here, and then it crashed. Wow, same thing. 2 months. And maybe let's see where we exactly made the big crash, which is around here. The big crash happened 51 days. So yeah, it's in 2014 it took us a little bit longer. So let's make a projection here. So if we take a price date, date range from when we touched that, if we consider this one as a test, how many days would it be for taking 1 month? Yeah, that would be 6th of May. So could be before the halving that we get that crazy drop, capitulation, and yeah, that's what I kind of am like expecting. It could take longer, you know. Time is not really something that we can predict, but if the bearish cross, if we don't recross into a bullish cross here from this spot here, if price keeps staying below the 7,000 right now, it's the price keeps getting pushed down, right? So below 7,600, if price keeps staying below there, the divergence is going to be stronger and stronger. As you can see here, the distance between the orange line and the blue line is going to get stronger, and there will be more pressures to the downside, which means that price is going to be getting pushed down. So let's go to our daily chart. So yesterday I've told you guys this spot here is quite an interesting spot because we kind of broke out of the descending channel. What's I'm saying? Sorry, the channel, the downward trend, the downward channel. So I've explained to you guys that this most likely, potentially, is a bull trap. So that was one of the possibilities. If we break down below this green box here, that would confirm that this was a bull trap, and yeah, nothing changes, and we will most likely go back down towards our 6.4K level. That was one scenario. But another scenario is, the bullish scenario is that this is actually a falling channel, right? And the falling channel usually breaks to the upside. And if we make a measured move from here, from this falling channel, right? If we make that measured move from here, top here, and we put here, and if this was our breakout point, then we would be hitting exactly our green box. And this green box is very confluent with obviously our previous order block at that zone where we broke down from in the past, as you can see. So that's a very important order block, and as like I told you, that would be confluent with this zone where we have our EMA 55 and our EMA 200 on the 2-day chart. And not only that, if we look at the weekly chart, that would be confluent with all of these moving averages on the weekly chart. That is the EMA 21, the EMA 55, the moving average 21, like everything. So would it be strange that we would, you know, during this weekend make a crazy move upwards, wick out over all the over leveraged shorters, and then push the price down? It wouldn't surprise me. But if we somehow manage to break above this and close some candles above all of that resistance, then it changes. It changes a lot, because in the macro vision, that changes a lot. As you can see here, this is the monthly, and this yellow line is basically the most important line on this chart. That's the EMA 21. If we manage to close this candle above this month, by the end of this month, if we manage to close the price above that, and the yellow line is currently at 7,296. If we manage to close a candle, the monthly candle above that area, I would be actually very bullish. The reason why is, as you can see here, we have a very long wick on the bottom side. That means that there's a lot of buy pressure, and this candle would become a fully blue candle, almost over the more than half of the body of the previous candle, and that would actually mean most likely continuation to the upper side. So in the macro trend, that would change a lot of things. So actually, this move that is upcoming this week, well, not this week anymore, next week, yeah, I think next week or the last week, yeah, or just before a couple of days before the end of this month, is actually super crucial for Bitcoin. And if you are a Bitcoin enthusiast, you should definitely be checking that out. And yeah, for now, that's basically still my scenario. Either we break upwards one more time towards this green box here, or this was a bull trap and we get a rejection, and most likely we'll be ending up where I think here on this green zone eventually. right? So what will happen is price is going to get rejected. It will come down here to the 6.4k, make a small bounce, and most likely come down to around the 5.8k eventually, right? Eventually. It can take a long, that one can take maybe a little bit longer than we expect, but we will be analyzing it on from day-to-day basis. Right now, we just keep analyzing things and taking things as they are. We cannot predict the market. The market will do what the market wants to do. So what is very important is, like I've been telling you guys before, Bitcoin has been following the S&P chart pretty on a pretty high level. And let's go back to our S&P chart. As you can see, this is the 1 hour. Maybe let's talk about the daily close, because weekly close, actually weekly close, because yesterday we had the weekly close on the S&P chart. And as you can see, for me, this is starting to look quite, it's still bullish, but it looks quite toppy already. And like I said, if once we break down from this rising wedge, all floodgates, all hell will break loose. But yes, there is still space to go a little bit up, because if we trend here and we hit like this orange line here, let's say the EMA 200, 2,956, and then Bitcoin will most likely be at our area that we are expecting, around the 7.8k. So what happens on Monday will be very, very important when the stock markets reopen. But for now, I have to say that if you look at the short-term trends, it still has some space to go up. As you can see, we're still hanging above the yellow line, the EMA 21. Stocks are still curling upwards, and RSI is still above the EMA. Very, very positive. So I do think that most likely on Monday, when everything is opening up, we might still see some continuation of the trend. And if that means that S&P is going to be making continuation, Bitcoin most likely will make continuation as well. So for now, let's look at the expected move charts on Bitcoin. As you can see, first standard deviation on the upper hand side is at 7,235, and the bottom first standard deviation is at 6,936. So, and we can see that the curve, it looks pretty up higher, right? So the probability that we are going up is quite high, higher than going down right now. So this is very important, because if we hit our first standard deviation on the upper hand side, 7.2k, that would also conclude that we will be most likely breaking this flag. Well, it's a downward channel, right? But it's a bullish falling wedge. If we break this falling wedge and close some candles above this EMA 55, which is at 7.2k, like I told you guys, this is, if we start closing candles above this 7.2k line, most likely we'll be moving up towards 7.6 first and make a small bounce, and then most likely a little bit higher, even more. Most likely, that's what I am seeing. So the expected moves charts is actually telling me the same thing, same scenario, that the bullish side is most likely has the highest probabilities for now, if price doesn't change. However, if we go to the bottom of the first standard deviation, it's at 6,900, and as you can see, 6,900 is exactly here. This is this green box that I've been telling you guys. If we keep touching, of course, and if we break through that green box, most likely what will happen is that we will go down towards, maybe like the first support will be like 6.7, something like that, make a small bounce, and then end up here at 6.4k, but in the opposite direction. So right now it's weekend. Stay safe, stay home, and don't do that much, and just chill and watch the charts and try to learn some stuff meanwhile from videos or something like that. That's basically what I've been doing every day, trying to keep myself useful and trying to learn new stuff all the time. Okay, let's go to a 4-hour chart to zoom in a little bit. And as you can see here, nothing really has changed. This bull trap here, you can see it more clearly here on the 4-hour chart. We got rejected there. Right now we are very, 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 very close to this upper side, and this actually looks quite bullish. Like I said, look, this is some sort of like a bullish pennant that is being formed, but it doesn't mean that that it will be pushing up, of course, but the probabilities are higher that it's going to be pushing up than down. So here, as you can see here, this is actually also a bullish flag formation, but then the price went down. So it's a matter of probabilities, but right now, of course, the probabilities are a little bit higher to the upside than the downside. But until it happens, until we get confirmation, we don't really know. And like I said, weekends are really full of mind tricks and full of craziness because of the volume, right? The volume is so low that whales or big players on the market can be manipulating things, and CME is not trading, so the big professional traders, institutions are not trading. So it's very dangerous to be trading during the weekends. So until we see a complete break and some candle closes above 7.2k, I wouldn't do much. Just wait it out and see what happens. Although I do think that the probabilities that we are going up is higher than going down at this point in time, and that is because, of course, like I said, S&P chart is showing actually still has some room upwards. They closed pretty good as well. As well as Nasdaq, by the way, as you can see here, Nasdaq made a small dump but then recovered quite nicely as well. And as like I said, Nasdaq is one of the charts that has been leading almost everything, and they closed above the yellow EMA 21. So that's a pretty solid close of the week action as well for Nasdaq. So I think there will be continuation as well on Monday when the markets are reopened. Also, as you can see here, the volume on the green candle is quite substantial as well. That's a very positive sign for continuation. So people are seeing the news and thinking, oh, like I said, like if you've seen my video yesterday about how hedge fund managers are dumping basically their stock prices on retail because they are putting out these positive news media about we found the cure for COVID, we found a vaccine for COVID. Gilead was the company that found the cure, and then people, the retail, massively bought the stock. It went up, I think 15%, Gilead stock price. And then what happened is the hedge fund managers just dumped it all on the people, on the retail, and then retails are holding the bag right now, holding the stocks. And like I said, once this rising wedge breaks, I think it's going to be very painful, to be honest. Yeah, I think it's going to be very painful once this breaks. And I think we're gonna have a lot lower prices than what people are thinking. But for now, this pumping of the money is doing their job, you know, like, so yeah. And here, oh, we have a small movement here. We were trying to break through the resistance. So like I said, the probabilities are quite high that we are going to take one more leg upwards. But who knows? The weekend is still long, and the most important thing will be Monday when we resume action and trading action. But as long as we don't have any candle closes above 7.2k, everything can still happen. So it's just a little bit of wait and see. And I'm actually waiting now for the 12-hour candle close, which is going to happen right exactly now. So let's take a look at the 12-hour just to see if anything changes there. And there we go, we got a new candle. And as you can see here, the 12-hour candle close changed a lot of things on the expected move charts. As you can see now, it is flat. Of course, the zones of the standard deviations is still exactly the same, to 7,267 and 6,900 about on the bottom of the range. But as you can see, it's pushing upwards. It has a little positive slope right now. So yeah, still think that during the weekend there's a lot of fuckery ongoing. So yeah, most likely we will still have a little push up. Let's look at some other indicators, if we can see something going, we can see that the stocks on the 4-hour chart is starting to slow down, but they're still quite high up there, so the momentum is still on the positive side. Let's look at the RSI. RSI is still head above the EMA, but it looks like it's getting rejected and curled back down. This is a quite dangerous situation, because if this crosses down and gets confirmed down, then we might get a rejection, right? So if we close here and we go all the way back down to our support bottom, then things might change completely. And we can see here HVP, historical volatility percentile, is flashing red right now. That means that there will be this is a 4-hour chart, so there will be quite a substantial amount of price movement right now, most likely in the $100 to $200 range. So nothing that's going to be very conclusive, I think, today, but we will see more if we get rejected from this area, yes or no. That's basically what today is going to be. But right now, as you can see, this is the we had another attempt, as you can see here, but immediately we get rejected down from this part. Like I said, you saw it. It's just almost impossible to be like giving clear direction right now. Maybe we'll break up, maybe we'll break down. Everything is quite conflicting, as you can see now. Even the expected moves chart is giving a slope down, so now the probabilities that we go to 6.9k is a little bit higher than breaking up to 7.2k now. So you see how fast things can change, right? And that is because obviously RSI is being pushed back down here, but we'll get some more clarity in the next 4 to 8 hours, because the historical volatility percentile is flashing red. That means that we'll get that move of around $100 to $200. And yes, as a trader, $100 to $200 is a substantial move. And if it wasn't the weekend, I would be trading this, but it is the weekend, so just taking a good look at the charts, but that will be it. So something else that I wanted to show you guys is, of course, the CME chart, which is actually the most important chart for all traders in Bitcoin. CME chart, as you can see, did not show any bull trap at all, and I think that's something that is very, very important, right? So let's change this color theme to dark first, because this white is hurting my eyes. And yep, as you can see here on the CME chart, we never had that breakthrough of the resistance of the channel. This is still a perfect channel, and as you can see, the daily close really looks toppy, right? This looks more like a rejection pattern than a continuation pattern. Although, like I said, what can happen is the market can reopen here and then make a small bounce up towards, like I said, towards the 7.2k and then higher up. So nothing is really conclusive, but we still have to see that we still can see that it's still closed above the EMA 21, which means most likely there will be some continuation, and we might break above that falling wedge. And like I said, if we draw a pattern here from that falling wedge, so we take this around this here and we make that movement, if we break through, as you can see, it would hit our zone, liquid zone, that we have been talking about here, right? So our CME chart is showing us pretty much exactly the same as the spot price, except for that little bull trap that we created on the spot price chart. So that's the only difference. But for now, still indecision. Probability is still on the higher, that we go up is still a little bit higher for me than down. But yeah, it's very inconclusive right now. The only one more thing that I wanted to show you guys is the hidden bearish divergence that we can see on the 4-hour chart. What is hidden bearish divergence? Here, I'll give you the cheat sheet. Hidden bearish divergence is when the price makes a lower high but the RSI or any indicator that you are using, the oscillator is showing a higher high. So what we would do is we go back to our 4-hour chart. I'm going to put this into a line chart to make it a little bit clearer and a little bit easier to see. And as you can see here, from this spot price here from the 17th of April until the 18th of April, yes, here we have a higher high, as you can see, higher high. And then if you compare that on the RSI that I have below here, from the 17th of April until the 18th of April, you can see that we have a lower high, right? So from higher high, lower high, higher high on the price, lower high on the oscillator. And what does that mean? Hidden bearish divergence, which means that most likely we will have a continuation of our downtrend. That's what hidden bearish divergence mean. But hidden bearish divergence, it's not because we have it right now that the impact of that hidden bearish divergence is going to be happening right away. So the problem with divergences is that they usually they most of the times they always come out and come to fruition, but we don't know when it comes to fruition. So that's a little bit the pain in the ass with playing divergences, because yes, if this price goes a little bit higher, we still have hidden bearish divergence, right? If this point goes to this point here, we still have hidden bearish divergence, right? But it just gets moved on a little bit to a later point. So that's a little bit the issue here. So we do know that in the future, what that means is that we will keep continuing our downtrend, because the trend is still our friend. If you look at everything, how the price is going, we have a lower high here, lower high here, a lower high here. So all lower highs so far. So the trend is still a downtrend. So for people who are very, very, very positive, yes, most likely in the short term, we have a pretty big chance now to actually more than I expected, actually, because I think on Thursday I was already expecting, after we had that crash here towards our 6.4k level, I thought, yeah, well, we will have a weak bounce back up to like 6.7, and then we'll most likely continue our trend down. That's basically what I was expecting. But instead, we had that crazy push up all the way to our 7.68 Fibonacci retracement level, which you can see here. If we do a Fibonacci retracement level, from this point to the bottom, as you can see, 0.76, exactly 7,246 touched it, exactly that Fibonacci level. And now we are hovering around the 7.1k level, which is the golden pocket ratio. So yeah, let's see what happens. Do we break up or break down from that? We will know by tomorrow, as you can see, right? We are being pushed down from this channel right now. So tomorrow we'll know, but most likely, it just looks so scammy during the weekend. So I think we're gonna have that crazy push upwards, and then people will be FOMOing and thinking everything is going to be amazing and great, and then next week the hammer of Thor is going to be hit down, and people won't be knowing what is going on and happening. Similar to all these people that are so bullish on the stock market, I think a lot of pain is going to come. And all these hedge funds and all these fund managers that are telling you guys buy the dip, I'm really concerned about the retail. People are going to try to buy the dip because they're saying, wow, it went down 30%. But like I said, people who have traded the cryptocurrency during the bear market know that you should not be buying the dip during a bear market. During a bull market, you have to always buy the dip all the time. But during a bear market, buying the dip strategy doesn't work at all, right? Okay, let's go into something else, and which is something that I've noticed, and that's the open interest chart. So I've been talking to you guys, whenever the price goes up and the open interest goes down or stays stable, that is actually a weak bullish trend. So I've been looking at the BitMEX charts because of course, BitMEX has the highest open interest of all the perpetual or margin trading exchanges. And as you can see here, while the price went up, as you can see here, price went up, but the open interest went down. And like I said, very, very scammy, right? Very scammy. That doesn't look good at all. Maybe go back on like a 1 day chart. Yeah, so on a 1 day chart we can see this. So during this whole recovery zone here, as you can see, open interest went up a tiny bit, but not that much, as you can see. So price went up a lot, but open interest, no, doesn't want to go up. So what does that mean? Like I said, this whole recovery is, for me, it's just a distribution pattern, and I think it's going to be breaking down sooner than later. But like I said, a small leg up more, very, very possible. But yeah, open interest is not showing very, very, very positive things on the BitMEX chart. But then let's look at OKX. Chart, and what we can see on the OKX chart is something very, very different. And if we go on the 1 day here, so 1 day here, yeah, so price went up, as you can see, price went up, but open interest went up substantially as well, as you can see, 70 million to 105 million, while the price went up. So that's completely a different story from BitMEX. So what is going on? Do the Chinese have too much money to spare? Do they believe in Bitcoin so much that they are the ones that are pushing the price up? They are the ones that are buying Bitcoin right now. All the Chinese people are buying Bitcoin. Well, it's possible, right? Because they are the only ones who are cured from the COVID pandemic, and they're buying Bitcoin with all their money that they have a spare. They believe that Bitcoin is going to be the savior. Well, Bitcoin should be the savior of the economy, but I doubt it that the people that are in power are just easily gonna let that happen. But that's a longer story, and a story for another time. But this is very interesting to notice, is that the open interest on the OKS chart went up while the price went up, while BitMEX and all the other exchanges went down. So overall, if you total it, obviously the total amount is still open interest didn't go up that much, but yeah, just very interesting to notice that on OKX, that's the only perpetual exchange, the open interest did go up while the price went up. So yeah, Chinese people are apparently very, 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 very bullish right now on Bitcoin. Maybe they know more. Maybe they are these genius traders, and they think they know that Bitcoin is going to go to the moon. Who knows? So let's go back to our VWAP ratio. Let's go to the VWAP ratio. VWAP ratio is something that I always use also for the long-term checking, and as long as this purple line is below this pink line, things are not looking good. As you can see, every time the purple line crashed below the pink line, it took us a couple of months before we recovered from the whole crash and the whole things. And right now, although we are trending back towards the neutral zone, the purple line is still below the pink line, which means that still not positive to buy, and definitely not the right time to be buying just yet. Looking at the hash ribbons are diverging to a closer space in between, which means the miners are suffering a little bit less. That is, of course, because the Bitcoin difficulty adjustment has been ongoing, and it has been making life a lot easier for miners, because the difficulty has been decreasing, so miners can mine more easily Bitcoins, which lowers their pressure. But although the cost for them is still very, very high to be mining, they are still not very profitable. And to show you guys that they are not profitable yet, we can go to this site here. It's ASIC miner value. Let's refresh here, and we can actually see what the profitability is profitability, sorry, the profitability is from the miners on which type of mining equipment that they have. So for me, of course, the most important ones are the Antminers. Those are the most used mining systems. And as you can see, if they have an Antminer K5, which is something that is very, very rare at this moment, they have $8 a day that they are making profit. The S19, which is going to be released in May, would have a profitability of like $5 or $3 a day, so that's still very, very positive. And all the rest, which is currently ongoing right now, the most important ones is of course the S17, the S17 Pro and S17 Plus. As you can see, they are still profitable with $1.5, so they are still able to be ongoing and to be mining. Everything else below that, starting from the S15, is not making money, so are losing money right now. The problem is right now is not really the issue. The issue is the Bitcoin halving. When the Bitcoin halving happens, then you have to double the amount of power to be producing or mining the same amount of Bitcoin, and then the Antminer K55 would still be making profit, obviously, but all the rest, for example the S17 or this and that, would not be making money or would not be profitable anymore. So that means that everybody is pushed towards the new systems, and if the mining company is not profitable enough or didn't have enough reserves of enough money to be investing into the new machines, then obviously they will have a problem. So that's something that we have to look forward to and see what happens. Let's go to our block. If you don't know what the Bitcoin halving date is, we can see it here. This is the countdown. We still have 22 days, 17 hours and 43 minutes, and the estimated will, because it's depending on the hash rate, of course, right? It can the more miners, the higher the hash rate, the faster it will go. The lower the hash rate, then the more time it will take to get to that particular block. But the estimated date of right now is May 11, 2020, which is a incredibly beautiful date because that's the ETA of the block Bitcoin halving, but also the ETA of my baby son that is that might be born on that Bitcoin halving date as well. So for me, it's a double exciting day. So that's what we are looking for. What else did I want to tell you guys? Oh yeah, gold. Let's look at gold, because gold is actually one of the real hedges in the economy right now, because while everything went down, gold held up pretty well. But right now, as you can see, we have a pretty big drop right now on gold. Do I think that this is bearish? I don't think this is bearish at all. Of course, we went up so much, so normal retracement is quite normal. But look at this, guys. Look at this monthly chart. This looks as a big continuation of the trend, and I do think that by next month we most likely be hitting 1,800 or something like that. So I'm waiting for this to drop maybe a little bit more and get my pot of gold. If you would be trading gold, I would give you the advice that you should be trying to get as much physical gold as, because paper gold is going to be, I think in the future, could be very problematic, because a lot of people are trading paper golds. And as you know, if you are unable, if everybody starts would be going to the commission and ask to trade their paper gold into their IOUs into real gold, I think that could be a big problem for the gold dispensaries. So yeah, if you can, if you are interested in holding gold, I would definitely try to get some physical gold or trade for physical gold rather than paper gold or IOUs or ETFs or anything like that, because yeah, strange things are happening or are going to happen, not now, but yeah, once people realize that the economy is I think during when more companies are going to give out more second quarterly results or actual second quarterly results, I think yeah, I think a lot of influence is going to happen there. So let's wrap this up. Right now, still nothing happens. We're still below the 7.2k, still within the channel. We are looking, if this breaks above 7.2k, close some candles, then most likely we'll be hitting 7.6k by tomorrow, Monday, something like that. If we break below 6.9k, close some candles below that, most likely 6.7, and then eventually 6.4k. That's it. So yeah, I guess that was the show for today. Let's follow up on things tomorrow. As always, 7:30 p.m. GMT plus 8 every day on Facebook and on YouTube. Click like, click follow, and I'll see you guys tomorrow. Until then, stay home, stay safe, and stay COVID free.